milestone that I'm happy about. I'm very proud of the hard work, and I'm sort of starting to see the effects of compounding that I've been reading about for years and years and years, and I'm starting to kind of actually feel those effects. But, it's something that we've worked hard toward, and also, definitely need to call out the fact that both my husband and I were super privileged to graduate without any college debt, and that absolutely set us up for being able to start this journey.
Welcome, millionaires and future millionaires. You're listening to the Millionaires Unveiled podcast, a show where you'll hear the stories and interviews of everyday millionaires. We'll unveil their decisions, their strategies, and their portfolio allocation. Now to your host, Jace Mattinson.
Welcome back to another episode of the Millionaires Unveiled podcast. This is episode number 290. It is tax times, folks. In fact, I think this is probably one of the latest days, I guess. April 18th here. Today's the 17th. But tomorrow is tax day. So hope everybody's got their taxes filed or their extensions done. I was looking into just taxes in general, and this is always kind of an interesting time of year to look at what your effective tax rates are and some of the best and worst tax states to live in. And, it's interesting depending on what kind of consumer you are, what this plays into and how this affects. I mean, obviously we know some of the highest state income tax states are California, New York, Minnesota's up there. And then we have, a handful, dozen or just under a dozen that are no income tax: Texas, Florida, Nevada, Wyoming, South Dakota, Tennessee, Alaska. But those states typically have much higher property taxes and sales tax. In fact, sales tax in Tennessee is almost upwards of 10%. So interesting thing to look at. I think a lot of people now in this day and age are looking at this probably more in depth than maybe they were previously, partly because the pandemic has changed a lot of working habits, and it'd be interesting to see where kind of the population trends continue as it relates to state income taxes, property taxes, and sales taxes. But at any rate, everybody's, for the most part, subject to some sort of federal tax, or at least filing a federal tax return. Maybe you don't have any to pay, but if you're a real estate investor, have some losses or whatever, everybody's situation is different. But at any rate, something to look forward to, I guess, this week is getting that taken care of one way or the other, whether it's through an extension or actually filing your return. So appreciate those that continue to leave reviews. We've had several good ones come in. I'll definitely want to continue that trend. I think we're upwards almost 760 on iTunes, and getting some more on Spotify as well. So wherever you listen, please leave us a rating and review. If you'd like to be on the show, send us an email, millionairesunveiled@gmail.com. We'll get you scheduled and get rolling on that. Think that takes care of housekeeping this week. So this week's episode, we have Emily. She's net worth of $1.5 million-ish. About $1 million of that is in a taxable brokerage, and then a little bit in 401k or retirement accounts, and then a little bit more in some cash. She does not have a house or a car and never has. So crazy story about how that's all come about. She's just shy of turning 30, works in consulting, and has gone to got a degree, and also went to business school. So we get into kind of her educational journey and how that has set her up for success. So great interview with her. Back-to-back weeks with 29-year-olds. We had Kyle last week. He was 29, had his own business in the heavy equipment space, and he had about $1 million split between cash, home equity, his business, and retirement accounts. So without any further delay, let's get into the episode with Emily. Emily, do you want to just give us a little about your background and what you're up to now?
Sure. Hi, everyone. Thanks so much for having me on. I am a consultant. I've been consulting my entire career. I'm happily married, I've been with my husband for over 9 years now. In my free time, I love to run and be outside. I do a lot of skiing in the winter and hiking in the summer.
Okay. And what is your net worth today?
Today, we're looking at just about over $1 million in my taxable brokerage account, a few $100,000 in retirement, and about $100,000 in cash. So about, call it 3/4 in taxable brokerage, a quarter in retirement. And I do not own a home. I don't own any real estate. I don't own a car. We don't own a car. And we don't really have any other physical assets to speak of.
Holy cow. So hold on here for a second. No home and no car. How can that be? That's just not normal for any American to not own a home and not own a car.
Yeah, I think it started when we graduated from college and we both ended up in, a big city. And, like most of our peers, we didn't know how long we were going to be there. We didn't know how long either of us were going to have our job out of school. And we both ended up staying in that city for quite a long time. And it's not, in a city, you don't really need it. We have good public transportation. We get around on our feet and on bikes, and now they've got these fun electric scooters. There are a lot of options. So we don't feel at all we're missing out. In fact, like it would be probably a huge burden to have a car and have to park it and pay for parking and all that jazz. And the no home thing is very similar, which is we've never known how long we were going to be here, or if we were going to move cities for our job. It never felt like it was going to be fully permanent, and it also just didn't make sense because we didn't need a house. We were very comfortable in an apartment.
And have you rented the same apartment for several years, or have you moved around quite a bit?
I've moved around and he's moved around a bit, but since we've been together, since we've been living together, we've been in the same spot. So we've been there for I think about 4 years, something like that, and weathered COVID in 700 square feet.
Wow. So let's dig into the net worth just a little bit. So the money in the taxable, is that basically invested in stocks, bonds, mutual funds? How does that break up?
Yeah, great question. So when I first started out, it was a whole bunch of random mutual funds that I didn't really know what was going on there. And as I've gotten smarter in investing, all of our investments and all of my investments have funneled into total stock market mutual funds in the ETF version or the mutual fund version, depending on which account and which direct deposit and all that. But pretty much all of it is now in total stock market mutual fund.
And is your retirement accounts the same as well?
Yep. The retirement account is, I can't remember if it's one of the rollover ones or maybe the 401k. I don't think we had the option to do a total stock market. So I think we're in whatever is closest to it with a very low expense ratio.
Okay. So I guess, has the strategy been basically any excess money after you're invested in your retirement accounts, you either put in cash or invest it in a brokerage account pretty much?
Yeah. And I would say we don't really even think about cash. Cash is something that we make sure we have enough. I think we do our 3 to 6 month emergency fund. I think we're a bit conservative there. We're quite conservative in how much cash we keep. And otherwise, everything extra just goes straight into mutual funds.
Interesting. And no desire to invest in real estate at all?
For a while, there was a desire. I think I saw a lot of my peers start to get interested in it. Probably, I don't know, maybe 4 or 5 years ago, real estate investing was starting to get a lot of press in personal finance publications. And so I kept my eye out. I had a lot of Zillow alerts in different markets. I mean, we had one in Atlanta. I had one house. I was like, okay, this math works. I am fully confident. And then, since then, we've seen prices really, really shoot up, and the math has made less sense to me. And honestly, I've been very happy with having a very passive investment in mutual funds, and the idea of becoming a landlord is less attractive now.
Interesting. So the retirement accounts, real quick, just want to go back to those, just given that between that and your brokerage, it's a massive chunk of the net worth. Do you have a specific split between, traditional versus Roth, or has there been a strategy around that?
Great question. So Roth, we have not been eligible to contribute to for a while. Roth IRA. Generally, I'm a big believer in just maxing out my traditional 401k. And I guess to answer your question, I don't know if we have a really big strategy there. No, I think I kind of believe in diversifying. I don't know exactly where the taxes are going to land into the future. I don't think anyone does. So I feel good about maxing out my 401k, my traditional 401k, and Roth when I was eligible. And
no HSA at all either?
No. I think there's only one job I had that had one.
Okay, cool. Well, good deal. Pretty tremendous, net worth for, you're pretty young, right? Relatively speaking.
Yeah. Yeah, I wanted to sneak this interview in while I was still in my 20s.
Oh my gosh, you're kidding.
Yeah, I mean, I think honestly, it's a milestone that I'm happy about. I'm very proud of the hard work, and I'm sort of starting to see the effects of compounding that I've been reading about for years and years and years, and I'm starting to kind of actually feel those effects. But it's something that we've worked hard toward, and also definitely need to call out the fact that both my husband and I were super privileged to graduate without any college debt, and that absolutely set us up for being able to start this journey.
So, Emily, I assume being consultant, you have a pretty hefty work schedule, right? Like you guys probably have quite a bit of work time. Do you plan on staying in the same field for quite a while, or once the compounding really starts to hit, do you have plans for a pivot?
Great question. So, I'm having a tiny bit of a quarter life crisis, you might call it, where I am starting to finally feel financially comfortable enough to not make every career move based on compensation, which has driven compensation as well as career trajectory have driven a lot of my career moves and, my dedication to consulting. And for the first time ever, I think I'm feeling psychologically comfortable enough to do something I've always wanted to do, which is actually to do something entrepreneurial and start my own business. So, and I would absolutely, I think the reason for that is because of our finances and because we are financially comfortable and because we've built this nest egg, I feel now comfortable taking a risk in my career.
Very cool. And do you have an idea of what that is, or you're just starting to get comfortable with just the idea of breaking off?
I have some idea, some potential partners, but nothing concrete yet.
Got it. I think Jace didn't go into this yet, but where does your money psychology come from? How did you grow up with money? Obviously, you're very good at saving and planning and things like that. Was your family like that, or are you a complete anomaly?
Yeah. So I would say that I am very lucky that my family is very frugal, and the frugality was incredibly instilled in me. And I actually, way back when my parents downsized while I was still in elementary school, and I went from a big childhood bedroom to a very, very small childhood bedroom that could pretty much only fit one twin bed. And my parents told me, and I think I don't know what grade I was in, but my parents told me that they did it because they were saving for their retirement. And that absolutely landed with me, and I hated it. I sort of used it as I told all my friends that they downsized. I have this small bedroom now, and which of course is a very privileged thing to say. But their decisions were very transparent about why they were making these trade-offs, and they shared it with me. And so that I'm sure it rubbed off on me. So definitely the family side was instilled early on. But then personally, when I graduated from college, less than a year into the workforce, I was laid off. And at that point, I did not know anything about investing. I did not have organized personal finance. I didn't really know what was going on. And all of a sudden, I went from having a pretty good income to having no income, living in a high cost of living city. I had high rent. I had I had bills to pay. I was totally scrambling. I was even getting paper checks for my job. I didn't have direct deposit. And that panic led me to learn a ton about investing, really sort of right the ship from trying to understand how finances work, how personal finances work. It led me to learn about the FIRE movement, the Financial Independent Retire Early movement, which married what I already knew, which was frugality, and it sort of gave it a purpose, which was, okay, you're being frugal, you're saving all this money so that you never end up in a situation like I had just found myself, which was, having no income and having no control and feeling totally like the rug was ripped out from under me. So I learned about investing, I learned about all these things, and I haven't really looked back.
So when you started the journey of, learning personal finance, basically your foundation was your parents' frugality. But what was the first big aha that you had once you got from, let's call it 0 to 1, when it came to your personal finance strategy or just knowledge? What was the big aha for you?
For sure, the biggest aha was investing. So my frugality led me to keep cash. I was really good at getting a paycheck and not spending it all. Save, take that paycheck, put it in the savings account. And I did that. I did it for that first year. I did it for quite a bit, even as I was starting to learn about this. And I did it throughout all my summer college jobs, etc. Take the paycheck, don't spend it all, put some of it in the savings account. And so when I started to learn all about this, I learned about investing, and I realized how much cash I was sitting on. And I was not comfortable enough yet with knowing where to invest it. And I was totally in a analysis paralysis spiral of like understanding the power of investing, but not knowing tactically, how do I open a Fidelity account or a Vanguard account? Like, what buttons do I click to link my bank account to pick the right mutual fund? All of that stuff. And so once I realized that, it still took me literally years to get comfortable with shifting from 90%, 95% cash to something that is really just an emergency fund. And I did it over time. I did a lot of dollar cost averaging of buying in very, very slowly and missed out on a ton of returns.
Absolutely. Do you feel like you're happy with your strategy? Do you feel secure with your strategy? Do you feel like there's more to know, or your strategy is very simple, and I think it's one that's very common on the show, and obviously it works. Are there things that you are tweaking, or you like what's simple is best?
I would say that I think you're spot on that it's a simple strategy. There's one of the books I read only recently, actually. I wish I had read it about 10 years ago, A Simple Path to Wealth, which is, a fan favorite of anyone in the personal finance community. It is simple and it is effective. And I do believe in that. Over time, do I see myself becoming interested in some more alternative investments? Absolutely. I went to business school and I learned about hedge funds, and I learned about all these other fun, angel investing and venture capital and all these other fun investment classes that are very exciting. And I think the way I think about it is like, those are opportunities for sure. And I think that you can have great success with them. But in my mind, they're almost a little bit of play money of anything that I'm willing to put toward those sort of exciting asset classes. I have to be willing to lose, which you can totally lose money in the total stock market mutual fund. But I feel so confident in the long-term return in that I don't think there are very many other asset classes I feel just as confident in.
Let me ask something real quick. You touched on college and kind of post-career aspirations and goals and everything. I mean, to this point in such a short time, you're not even 30 yet. Have you kind of checked all those boxes that you really wanted to check? Obviously, hitting Millionaire status forth there. I mean, that's a huge one. We don't do that. I'm just curious, did all those boxes get checked? And do you feel like that has propelled you at this point to kind of do the things that you really plan to do, through your 30s and 40s?
What do you mean by boxes to check? Because for me, those are not only the must-haves, those are the want to do. And if you're talking about the must-haves, I guess yes, I've checked a lot of them in terms of I went to undergrad, I started my career in consulting, I went through the ranks to some of the higher levels, went to business school. But the boxes I'm looking forward to checking that I have not done are the more entrepreneurial ones, are the build a successful business. Build such a successful business that I can actually start giving back to the next generation of women in business and female entrepreneurs. Build such a successful business that I can invest in those future companies or institutions or philanthropy endeavors. There's still a lot of want to do boxes I have not checked.
Yeah, for sure. So you mentioned you went to business school. I mean, love to hear your thoughts on that and how that's played into, career trajectory and mindset and that kind of thing. Yeah.
So business school is interesting because it used to have it still has a great value proposition for a lot of people. But for some people, the value proposition has diminished a little bit. And I'm one of those people in that when I graduated from undergrad, I joined consulting, and consulting actually kind of spits you out over the course of the ladder. It actually spits you out above the business school role before you even enter business school if you go full time. So when I was considering going to business school, it was really tough for me to think about leaving the workforce for a couple of years, only to come back at the same level or a level below at a different firm if you were to pivot. And you run the numbers on how much missed opportunity of comp plus paying the $150K to go. It's really expensive. So I realized that it wasn't going to go full time, but I was really interested in potentially doing it part time, which was a bit unusual and something I had to go to my employer and see if they would, number one, support me and actually, allowing me to go to class at night and on the weekends, and then two, actually pay for it and sponsor me. And they did, which I'm really, really lucky to have that sponsorship. But honestly, I probably would not have gone if I was footing the bill.
Interesting. I went through this same kind of exercise for myself a long time ago and had plans and goals. And at some point I still probably will either try to do a night program or something, an EMBA or whatever, mainly just because at some point I'd love to teach in college. But I understand the struggle, and I've done this with, I don't know how many dozens of friends too. And some of them chose to go do it and career pivot and whatnot. But it is a pretty hefty exercise to look at the opportunity cost of going with a bunch of unknowns, going to school, where you get in, what you'll do, where you'll land after, what your network was going to look like after, those kinds of things versus where you were already. And it's interesting to hear you describe how you kind of went through those and basically it landed at, hey, if I had to pay for it, I wasn't going to do it.
Mm-hmm. Mm-hmm. Yeah. And, it still makes a lot of sense for a lot of people, especially if they don't have a business background or if their career before business school wasn't related. But if you're already in that career, the career that you want to end up in, it's really hard to make the math work.
Yeah, for sure. So at this point, we've got kind of a decent history on where you've come from and kind of the last decade of your schooling and career, headed towards possible entrepreneurship, starting a business or doing something more entrepreneurial. Where do you go from here in terms of your net worth, your investing strategy? You mentioned you may get into alternative investments. Is there a target net worth you're looking to hit, or, something down the road in terms of giving back that you really want to do, or we're curious to hear your thoughts on that.
I would say that right now I have been so focused on building my career, socking away as much money as I can, trying to keep lifestyle inflation as low as possible, but it still happens, and sort of single-mindedly focused on this, on top of a few other things, that I haven't even given myself the space to really think about what's next. And that's what I'm just starting to do, which is, okay, now that I am starting to feel comfortable, what are those goals for myself? And I do know the one that I will go after is going to go start something on my own and see what we can make it and leave W-2 life behind for a little bit. But beyond that, I don't know exactly what all those goals are, but I definitely need to spend some time to think about it.
Do you have a target net worth or had one ever past getting to the million by 30?
I would say that originally I had a number in my mind, which was $2.5 million. And that number came from the 4% safe withdrawal rate, which is the commonly used number within the fire community that spits out about $100K a year of annual spend that you can safely withdraw and preserve your nest egg. With that said, inflation obviously has impacted us quite a bit. So I think, and the other huge unknown for me is that right now we are a double income, no kid family. That's going to change over the next few years, if I suspect, and if we're lucky. And I really don't know what that's going to look like. I've heard that household expenses are going to shoot through the roof, and you're probably going to have to get a different roof. But I don't know exactly what our cost of living is going to look like. And I think once I get a sense of that, I can kind of work backwards to figure out what my target net worth is. So maybe it's closer to 3.5, 4. But to be honest, my husband has no intention of ever stopping work. He has no interest in retiring. And I don't know how well I would do in retirement. I'm a pretty hard worker and I really like to bring value to people and collaborate. So I don't know if we ever will retire, but I do think that number is higher than the 2.5 I originally thought.
If you start a family and you can live with no car, then Jason, I will personally come and give you a trophy.
Oh gosh, I don't think I want to take the other side of that bet because I bet you're right.
So there's one expense you'll have that you didn't before. I guess you could have a train seat or an Uber seat. But, yeah. Anyways,
something like that. Good stuff. So, as it relates to your investment strategy and going a more entrepreneurial route, is there a level of kind of your nest egg at this point that you would be willing to risk on a business, or is that not something that you've thought through yet?
I have started to think that through in some conversations with some partners and potential partners. And it is interesting that because this has been such a focus of mine, the risk for me is more about my time and not earning an income at a W-2 job. And so if I think about that as being the biggest risk I'm willing to take, which is leave a high paying job, that to add more risk on top of that by actually risking some of the capital that we've built, I think is probably too much risk for me to a certain extent. And, call it if it's a few $1,000s or $10,000, $20,000, I think that's fine. But I can't imagine myself being willing to go much more than that, just because the risk for me is actually losing my income, which I'm, foregoing my income to pursue the opportunity.
Yeah, it's interesting as we've talked to more and more millionaire. I don't know that we did this very much at the beginning of the show, but it's interesting to talk through just the mindset on risk and risk tolerance. And I mean, I guess I'd be curious to know too, in the last 5 years, call it, I mean, have you noticed your risk tolerance changing as your level of net worth has climbed?
A tiny bit. I mean, I think risk as well as lifestyle inflation, how much I'm willing to spend, to me, those are kind of interchangeable, which is just my tolerance for spending in a way that's not a sure thing or a close to sure thing. And I guess, yes, and if I think about risk as both of those things, then yes, it has gone up. I do have a Robinhood account. I sometimes like to buy options. Sometimes they work out.
Okay, now we're pulling this out. Okay.
It's all play money. I am comfortable never seeing it again. It's not even part of my net worth because it's not important. And it's just for fun. I consider it just for learning. But yes, I guess I wouldn't have done that 5 years ago.
I'm gonna deem this episode that the title is gonna be "Every Millionaire Has a Closet Investment."
There are no gold bars in my closet, even if you look hard.
Oh man, that's funny. So what did you start the Robinhood account to play around with some stuff then and buy some options?
Oh, well, 2019. So just in time for COVID and all the fun that happened there.
Did you do any of the meme stocks too?
Unfortunately not. I was not risk taking then. We're talking like I would buy single shares here.
Oh man, I love it. So I guess, at what level of net worth were you comfortable doing that?
Oh gosh. Then I don't know. It was probably still over $1 million, maybe. I don't know. I'd have to go back and look. But
so you got to Millionaire, and there's like, hey, I could take a little risk with one option here or there.
Yes, exactly.
Okay,
exactly. And every single time I do something that's like that, let's say I pull the trigger on an option, I actually do consult my husband just because I want him to be confident. I don't want him to think I'm gambling away our money. I am the person in our household who I do all of our finances. I do all of our investing in our household, and I'm very upfront about our strategy, and he's bought into it. So when I do something like that, I just say, hey, what do you think about shorting this stock that may or may not be, something that we think is going down? Yeah.
As it relates to your spending outside of just, natural inflation on things, what are the things that you've been willing to spend more money on as from a lifestyle inflation standpoint?
I would say the biggest thing that we spend more money on than we ever did before, and I am okay with it, has to do with travel and eating out and doing things with our friends. Where, back in the day, if we went out to a nice dinner, we live in a big city, there's lots of great restaurants. It's a classic activity to hang out with our friends, is to go out for a nice meal. Back in the day, those meals would hurt me. I would go out to dinner and I'm like cringing when everyone's ordering, knowing that I'm going to pay my share and their share. And now I don't even think about it, and I am okay with it. And I know that's how it works with our friend group, and that's how it works in this life stage. And we're lucky enough to be able to do it. And we're lucky enough to have restaurants in our backyard that we can do this at. And I still don't know if there's as much value in it as I would like there to be, but I'm more comfortable spending on it.
Okay, before we get into rapid fire questions, I have one more question. Do your
Please.
friends know anything about your net worth?
They do not know anything about my net worth. They believe I am a crazy frugal person. In fact, at our wedding, my two best friends gave a speech where they talked about how much I love to find value, and they talked about how I'll buy food at the clearance section and things like that, which may or may not be true. I've never, I'm not saying that's true, but that's what they believe to be true. So they
witnessed you dropping cans in the aisles?
They have not.
Oh, well, that's not bad, though.
They have not, but they know better. One of my best friends is a excellent chef, and if she's cooking for us and we go out to a Whole Foods or whatever gourmet grocery store she shops at, she knows that not to give me the produce because I will not buy organic produce, and she will only buy organic produce.
Got it. Well, this is a battle. Okay, so I'm gonna, Jace, it's all you, buddy.
All right, let's get rolling on them. So what is the most expensive meal out that you paid for?
That I've paid for probably a few $100s.
Okay. And what about the most, I guess you haven't bought a car. What about the most expensive bucket list item, experience, or thing, related to travel that you've paid for?
Our honeymoon was by far the most expensive. It was a couple weeks in Europe, and I think it was about $6,000 or $7,000.
Okay. What was a key lesson you learned from childhood?
Frugality. It was a gift. Frugality, and I would also throw out education, which, led me to being able to pick the career I picked.
Okay. What's something on your bucket list that you're still looking forward to?
I'm looking forward to one day living on a beach.
Okay. Is that going to be a second home, or is you going to retire to the beach, or maybe a little of both?
Who knows?
Okay. Where do you think your original interest in personal finance stemmed from? Beyond,
my family's intensity around frugality, I would say it was sparked by the early blogs, the early personal finance blogs. And I'm going to give a shout out to, I believe it's Mrs. Frugalwoods, was an early blog where I just loved her writing. I loved her mission to get people to spend less than they make and do it with a goal in mind. And I think she did a really nice job and continues to do a nice job on that. What would you say are some of the best things that you've done to be frugal, or the most frugal things that you do or have done? I'm into all the hacks. I buy a lot of used clothes. I would say one of the sort of compounding ones was switching from a gym membership to the Peloton digital membership, which, we used to pay $100 each, $200 a month for a fancy gym. And now we pay, I think it's like $15 a month. And so over time, that's going to be really impactful. Real quick on Peloton, just because I'm a super user, I've got all the equipment, full disclosure. As a Peloton user yourself, not with all the equipment, but on the gym, are you worried that they don't remain solvent at some point? Oh, should I ask that on this podcast? I'm also a shareholder, so that was a great idea. Oh, perfect. No, I'm not worried. I think their content is king in the industry. Okay. Do you use a credit card? Yes. Yeah. I'm a big fan of the Fidelity 2% cash back. Oh, okay. Interesting. So not into collecting travel points or hotel points or anything, just using Fidelity 2% cash back? Yeah. The whole points game for me was a little too hard to keep track of, and I like simple and organized, and you don't forget anything. Nothing expires. It will always be there, and it's guaranteed. Yeah, for sure. All right, last question before we talk about mistakes and advice. How do you get ahead in life? I think you have to be really authentic, which I think takes some time. It takes time to figure out what it means to be authentic, who you actually are. But once you figure it out and you can lean into it and you can share it with those around you, it becomes a superpower. Okay. Are there any mistakes that you've made along the way, or specific advice that you would give to somebody who is just starting out on their journey? Yeah, the biggest mistake by far and away for me was just sitting on cash for way too long, not being comfortable investing, not knowing how to invest, just having this analysis paralysis of believing you could invest, but not sure how. So my advice for anyone starting out, and especially, I'll shout out to all the women who are listening, you just got to go for it. And you just got to eventually pull the trigger on an investment, and it's worth it. It's all of the loss, the opportunity cost of just having your money sit in cash versus sit in any number of these mutual funds is worth so much that you just got to take the plunge. There's a lot of stats out there about how women in particular are much more comfortable saving and better at saving, but then just struggle to invest. And when women do invest, when they actually are able to pick and be confident in their choice, they do better than their male peers because they don't necessarily go with their emotions. They don't pull out when they should keep their money in. So just have the confidence that you will figure it out and just get your money in the market.
On that note, real quick, just a follow-up. I mean, what led you to get the confidence to move out of cash? And then on top of that, I'd love to hear kind of just your mindset. Over the last 6 months, one of the unique things that I've really wanted to do with this podcast is be able to kind of track, things as we've had a bull market for essentially my whole working career and life and whatnot. So it's kind of been a little different until recently, right? We've had a couple different hiccups over the last couple of years, but especially the last, 4 to 6 months here as rates have increased significantly and we've had kind of some volatility all over the place. I mean, how have you, from a psychological standpoint, been able, as someone who's super frugal and used to be so heavy cash, been able to kind of ride that out, process that, and be okay with what's happening?
Mm-hmm. Yeah. So for me, it took truly years to slowly convert my share of net worth from cash to investments. And I did it by, the biggest thing for me was setting up auto investments, which I highly, 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 highly recommend for everyone. If you have some amount of cash that, you make, you save and you make more than you spend, you have that excess, auto invest it into the market, and not having to click the buttons every single time you invest was the number one tool that got me out of cash and into the market. I set it up in a way where it was like slowly going to chip at my cash over the course of, I kid you not, years. It was going to take years. If you did the math on what I said as my auto investment, how much cash I had, I was going to dollar cost average 4 years, but I only set it up once. I had to do the hard work. I had to pull the trigger one time. And then from then on out, it was set and forget. And I have that to this day. Almost all of my investments are auto investments. I set it up once. I keep the balance so that it can auto invest. And even if let's say you overshoot 1 month, you spend more than you make, at least I use Fidelity. Fidelity will just skip the investment. That you get an email, that you skip the investment, no big deal. So not having to continuously sort of beat yourself up of like, okay, is this the right time? Should I do it now? Is this the right investment? Just set it up and don't think about it.
Awesome. It's Emily with a net worth $1.5 million plus. Thanks for coming on the show today.
Thank you so much for having me. This was a lot of fun.
Thanks for listening to the Millionaires Unveiled podcast with Jace Mattinson. For more stories, investment opportunities, and information, check out our website, millionairesunveiled.com. See you next time when you'll hear from another everyday millionaire.